as any then to bring on board our experts and find out how much more pain before we see any sort of stability kick in. Nischal, hi, afternoon. Your thoughts? I mean, one thought that, if the US markets were to fall, maybe we're going to fall a little less. We've already fallen so much. Clearly doesn't seem to be the case.
Hi, afternoon. Thanks for having me. I think we are very close to the bottom, or that's what my thought remains to be. Basically, I'm becoming constructive on the market now. So you see, basically, there are two or three things which I would want to highlight. The one is obviously beginning January, we have seen the government is becoming very constructive on the economic front. So whether it was the tax rate cuts, whether it was the interest rate cuts, or recently, basically the spending which we saw in December and January, the figures have just come out from the government side. So I think all these three things basically are positive for the economy. On the other hand, basically market has corrected almost around 10-12%, and the stocks are down 25-30% from the top. So I'm saying this is a very good time basically where it is looking like basically that this is a constructive time. You should go out and start looking out for the stocks basically which you have always wanted to buy, and maybe start adding to your portfolio.
Nishal, that's the question that everybody is been asking about, that where's the bottom? Good to know that you are now becoming constructive, but help us understand that which are the sectors that you are eyeing at this point in time, because if you can talk stocks, the best. If not, at least pinpoint the sectors that are looking good to you right now.
So I think after a long time, I think banking has started looking interesting. It has underperformed for the last 4 or 5 years. But if we really look at it, even in this whole fall, I think Nifty has not gone, Nifty Bank is not down or hit a new low. It's holding on its own. But I think what's really happened is basically that the government has become constructive on the banking side. So interest rate cut first, then almost $1 billion or $1.5 billion worth of liquidity getting injected. And on top of it, now they have cut the risk weightages. So I'm saying it's very, very clear that the government has realized that for 5 years they wanted to control the liquidity. They have done that. And now it's a time basically to let go so that the economy once again starts doing well. So I think this is a very, very constructive phase. So I think banking is one sector basically one should look at. Consumer is another one. Basically, we have started seeing some first signs of recovery on the rural side when we speak to a lot of companies. Rural seems to be now reviving with the, the government's intervention and good monsoon. So I think consumption looks good. And there are certain other sectors basically which have not done really well over a period of time. I think chemical seems to be one of them, basically where I would go out and start looking for. So I think these are 3 or 4 sectors basically which I would start looking constructively on.
All right, but Nishal, when you talk about consumption, if you can pinpoint any of the themes that is looking attractive to you, because when I see some of these jewelry stocks, they are not holding up. Some of these auto counters, they are definitely in the reverse gear, at least for today and for quite some time now, when stocks like Tata Motors are getting hammered. And other than that, help us understand that where are you finding opportunities?
So I think one of the sectors basically which I would look out for is the FMCG, because I think rural is largely, once again, the first impact will start happening as far as FMC rural is concerned on the FMCG side. Stocks have corrected, I think almost all of them. And once the recovery starts happening on the rural side, you will start seeing basically the consumption coming back onto the rural side. The discretionary consumption, basically, we have to see what is going to be the impact of this rate cut. I have started seeing basically that the rate cuts, beside the rate cut, the income tax cut, I think that is putting a lot of money into the hands of the middle class, the upper middle class and the middle class. And I think that should drive the discretionary purchases, but we are going to see it maybe a quarter later. But what we are seeing at the moment is the rural side, and that should be helping the FMCG company. So within the consumption basket, I would actually focus on FMCG at the moment.